So what I want to do now is go over the Euro AUD position that we took this morning to start the week. I'm going to show you the P&L. I'm going to explain the whole entry to you. This was a real A1 entry signal with a little bit of the D1 sprinkled on top. Now, if you don't know what the A1 or the D1 or the D2 is, those are the three systems that we teach, that we back tested, and that we trade here at ASFX. And if you want more information on that, there's links in the description where you can learn how you can take the courses and join the team. No monthly membership fees, no subscription fees. It's one-time fee and you're in for life to learn and be active with us. Today, this was one of two pairs that I was really focused on. We had Euro AUD and GBP CHF. We had oil news last night that kind of shook up a lot of the CAD pairs, and none of the GBP pairs other than GCHF presented with a high probability setup this morning. So really the focus was between GCHF and Euro AUD, and I felt most locked in to Euro AUD initially this morning because our trend from last week carried beautifully overnight, and we had space today to move on its average daily range. Average daily range is a big thing for me because let's say a pair has only moved 60 pips and it normally moves 120. Well, I've got plenty of space to go make my risk reward. But if it's only moved 60 pips and ADR is only maybe 70 pips, then that would be a situation where you're not on an average day going to find potential reward to your risk there to make it worth it. So ADR played a big factor on this trade today, but let's break the whole thing down. So first, what I'll do is I'll bring up the P&L so you can understand my two positions. Now I traded this as a C setup, so I split my risk between two positions. You can see my entry at 159.95, that was the lower entry, and then 160.06 was the higher entry, the little bit higher. So what I did was I graded it a C setup, I divided the risk for my C setups in half, and when I put my first position on, I knew that if price continued to move higher for me, I could add that second position on. But if it didn't, because it is a low probability C setup, I would be able to get out and only lose half of my C setup risk. So very much scaling into the trade to mitigate risk almost from the very first minute that I click the button. Really, that's what it is. Now you can see where I closed. I took this entire position off here at 20 pips profit, which was about 2R. Then I've pieced myself out of the rest of the trade at 28. The first close was at 14. I closed more at 28, more at 25, more at 38. And I think my best exit, as we've been on the stream here this morning, I closed a little bit more when it pushed up to ADR. So let me look at my P&L. My best exit is at 42. So just 4 pips higher than where I got out here. And you can see price currently sitting at 160.40. So at most, this thing moved up to 53. That would have been the best possible exit so far, but I'm still holding a piece of this trade and it's still holding the 8 EMA. So it can continue to move higher for me and I'll just piece myself out of it. Very often, you'll see that I don't close the full trade. Unless we reach a resistance level, a support level where we know it could stop and bounce, I'm looking for this to carry and either stop me out in profit as I move my stop loss up and I piece myself out, or the end of the day or the end of the week comes and that's where I look to pull the full thing. So let's break down the entry signal. You can see I have this 2 candle formation as the A1 entry boxed in. That's what we need to set the whole thing in motion. If we don't get that 2 candle formation, none of this matters. But before we go into the 2 candle, let's break down the analysis. Let's go through the watch list, or the checklist, excuse me. You can see from the start of the day, market sentiment, the yellow line is bullish. That's the first thing we look at, so that feeds the long bias. If you go back to last week, you can see I've been long biased since Thursday. We had opportunities. Friday didn't really have any opportunities, but it did pick up and continue that trend off the Thursday support zone. So naturally, if market sentiment and the EMAs coming into my day on Monday today still say the same thing, I'm not going to call it a reversal. I'm going to look to continue that trend. Now, with this divergence on top, with this white line from the RSI high to the price action high right here, the RSI is falling and price is rising. That could show that something is changing. It could chop sideways. It could reverse. But I don't want to call it a D2 reversal until it breaks under the 50. Since this stayed above the 50 EMA, we're not going to call this a reversal. We're going to stay in trend and hope that that divergence can be broken, retested, and then used as support for the move to happen off of. We'll also want to take into account the Asia high created with this pin. See the 2 candles to the left and the 2 candles to the right? They are not higher, so that pin is our resistance zone. Here, it comes off the zone. Here, it comes off the zone. Here, off the zone, but still making higher lows as well. So it's kind of chopping in this flag formation. It's a bullish flag. When the 2 candle formation closes at 6:15 in the morning, New York time, it doesn't just break through the divergence line on the RSI and on price action. It also breaks past the Asia high, breaking out of the Asian range for the first time. Now it's making this like exactly what we would need it to be for an A1 because it's out of the Asian range. If we're still in the Asian range, those are sometimes choppier trades, especially with divergence. So the fact that it breaks out, that makes me even more excited. It breaks the divergence, it breaks the zone, it breaks for a new high a day. I like this. It's making higher lows. Market sentiment is rising. Everything here fed that long bias. But I didn't jump in on the close of this candle. My entry price then would have been 160.12. You can see the price right above my head, 1.6012. That was not my entry price. You saw on the P&L here, my entry was at 606 and 95. So how did I get in lower? I waited for the pullback here on the 15-minute, and then I got in because I knew that my risk was very tight because I wouldn't want it to break past the open price of this 2-candle formation entry bar. So if we go down to the 1 minute, you'll see what I'm talking about. Let me blow up the 1 minute here. And you'll see everything. So now this box, this green blue box, that is that 2-candle formation. I have the first entry marked right here with this price and the second entry marked right here with this price. So what I did was once the 2-candle formation set up this bullish divergence on the bottom of it, I felt even more confident that this could be our stop level and that we could see it rise from here if the market sentiment line could pull into the buy zone and if we closed with a strong right leg. It did. So I put half the risk on here after the bullish divergence was formed, a little aggressive, but I liked that tight risk because when I enter here, my stop only goes right here. I don't want it to go break for another new low. I want it to hold that and pull this thing higher. So it was a tight stop on the first position, which is why I closed that position right here, taking some profit, like I showed you on the P&L, from the entry at 95. Then I added here, still using that bottom of that 2-candle formation as the stop loss. Because now market sentiment, the yellow line on the TDI, is in the buy zone, which tells me that this thing should continue to run higher for me. And that's exactly what it does. If you look, market sentiment is beautiful. Holding the buy zone, holding the buy zone, holding the buy zone. Just recently, it's just dipped into the sell zone, which means this might start to slow down, but that's why my stop loss is locked and that I can't lose any money on this trade. And I've been just piecing myself out as the trade continues to move to different R multiples. So it's really about that 1 minute market sentiment line. If I had taken my position here on that first entry and it had come up, pulled back down, but the market sentiment line had pulled back down into the sell zone, I would not have added. I would have probably closed the piece that I had in. But because we made a higher low and we continued to hold that market sentiment line in the buy zone, that's what told me to stay in the trade. And you can see I closed the first position here. I closed 50% up about 20 pips. The stop was only like 7 or 8 pips on that position. So it was over 2R. The entry there was at 159.95. And then this entry at 06, I closed some of that here at 28. And then like you saw more here up here at 38. And now we're up at 39 at most, like I said, going up towards 55. So I'm still going to hold this trade with my stop loss locked. I got a small piece left in. So if it does want to come down for some reason and stop me out, I'll get stopped out in profit. What I would most likely end up doing though, because we're at average daily range, you can see the green line. If it breaks the 8 EMA and heads towards the 21, I'll just yank the rest of the trade. I won't let it come all the way down here. But this could hold the 8 EMA and still keep rising today. There's a lot of pairs that have gone through average daily range today. Look at Euro CAD, busting through average daily range. Look at Euro JPY, way through. So I'm not going to just exit the trade. It's a winning position. I'm going to hold this as long as it tells me to hold it. And it's still candle by candle, beautiful, holding that 8 EMA, saying stay in, just give it time, stay in, give it time. So I graded it appropriately. I pieced my way in to keep my risk as small as possible, literally cutting the small risk in half and then splitting that half between 2 positions and then not being greedy. Take some off, take some off, take some off. Don't marry any trade. Nothing is ever going to be worth it that much. And now with this win, we had 2 wins last week, one on Monday on GBP NZD. That recap is posted on the channel. We had the win on Wednesday on Euro USD. And now we start the week this week with another win. It just compounds the growth of my account by mitigating risk, moving that stop as quick as I can, keeping it tight from the beginning, waiting for tight risk, and then letting good trades run. That's the piece that you have to do. And letting them tell you when they're done. Don't forecast and say, oh, it moved up for 15 minutes. I got to get out. No, relax. React to the candle closes. Is it breaking down? Is it showing you a break of the EMAs? It might just be slowing, holding that 8 EMA. Give it time. When we do our markups, I say this all the time. This is my last point here. When we do this and we do our markups and then we trade live, in the moment, in the live market, these candles seem so slow compared to how fast they seem when we're doing our markups. So it's really important to give your trades time. As quickly as we should be cutting our losers, we should inversely be letting our winners run for as long as possible. So that's the recap here on Euro AUD. Earlier in the stream today, we talked about GCHF. That was a great trade that James hit, but I just wanted to focus this little clip on Euro AUD. So you guys could see my P&L, you could see the trade from start to finish, and now you'll see how I'll manage this the rest of the day. I'm going to my workout class today at 12 o'clock. Maybe I'm still holding a piece of it then. Maybe I'm holding it into tomorrow. I held Euro USD last week from Wednesday into Thursday, and then it stopped me out in profit on Thursday. So I don't think you can ever forecast where the market will go. We can just continue to react to how the market has presented. And that's what I would give you here on the Euro